This presentation examines how we tax married couples and civil partners under the PAYE system. The purpose of this presentation is to explore the different methods in which married couples and civil partners can be taxed. We look at the transfer of tax credits and cut-off points between partners, and also when it is effective to transfer tax credits and cut-off points to each other. So, joint assessment. This is the most favourable basis of assessment for married couple and civil partners. It will automatically be given to you by revenue once you notify them of your marriage or civil partnership. However, it does not prevent you from electing another option to be taxed. With this method, tax credits and cut-off points can be allocated between partners to suit their circumstances. Electing to become jointly assessed. The couples themselves decide among each other which one is to become the assessable partner. Revenue will accept a verbal instruction from either party, or alternatively, you can complete an election form. The deadline to submit the election form is before the 31st of March in any tax year, but ideally it is better to complete the form before the 1st of January to ensure that the correct allocation of tax credits is available to both partners from the start of the year. Joint assessment usually occurs if only one partner has taxable income. All the tax credits and cut-off points will be given to that individual. If both partners have taxable income, they can decide which partner is to be the accessible party. If they log on to the Revenue website, under the PAYE services, this will allow the partners to split their tax credits and cut-off point in a way that ensures that they pay the correct amount of tax. So, when is it beneficial to transfer tax credits and cut-offs? To be honest, it's only really beneficial when one partner is liable for PAYE at the higher rate of 40% and the other partner is liable for PAYE at the standard rate or the lower rate of tax at 20%. So, this table below shows the full allocation of tax credits and cut-offs to two partners as if they were two single people. So each individual is entitled to a personal tax credit of €1,650 and each individual is also entitled to a PAYE tax credit of €1,650. Both tax credits total €3,300. They may be entitled to other tax credits depending on their personal circumstances, but these are the two standard tax credits that everybody is entitled to. Each individual will also be entitled to a cut-off point of $33,800, which means this is the maximum each individual can earn in any given tax year at 20%. Anything they earn in excess of this will be taxed at 40%. In this example, we look at two partners. One of them is earning $30,000 and the other is earning $18,000 in a year. Given that they both have a cut-off point of $33,800, both of them will pay tax at 20%. As both of them have sufficient cut-offs to pay tax at 20%, and they will both need their annual tax credit to reduce the PAYE payable, there is no advantage in this example of transferring tax credits or standard rate cut-off points between each other. In example 2, partner 1 earns $50,000 per year and partner 2 earns $42,000 per year. Both have an annual tax credit of $3,300. As both their gross earnings for the year exceeds their cut-off of 33,800, both partners will pay tax at 42%. They will also both need their tax credits to reduce their PAYE. So in this example, as both partners will pay tax at 40% of their gross income, there's nothing to be gained by transferring tax credits or cut-off points over to each other. So example 3. In example 3, Jack earns €48,000 per year and Mary earns €8,500 per year. Both have a standard rate cut-off point of 33,800 each. When we compare their gross pay to their cut-off point, Jack is going to be liable for tax at the higher rate of 40% and Mary is going to be liable for tax at the standard rate of 20%. Therefore, in this example, it may be beneficial for Mary to transfer some of her tax credit and standard rate cut-off over to Jack. So, this slide here looks at what tax credits and what cut-offs can be transferred from Mary over to Jack. If we look, if these guys were assessed individually, they would each have a personal tax credit of €1,650. However, Mary is able to transfer her personal tax credit of €1,650 over to Jack to give Jack a married tax credit now of €3,300. Individuals cannot transfer their PAYE tax credit from one party to another, so regardless of their earnings, both parties must hold on to their PAYE tax credit. This will result in Jack now having increased tax credits of €4,950 and Mary having decreased tax credits of €1,650. When we look at their cut-off points, they both start off with an annual cut-off of 33,800. The maximum that can be transferred from one party to another is 9,000. So Mary can transfer €9,000 over to Jack, which increases his cut-off point to 42,800 and reduces her cut-off point to 24,800. Now when we look at Jack, he's got an annual salary of 48,000. He can now earn 42,800 of it at 20%. He will still pay 40% on the balance of his gross pay. However, Mary has a cut-off of 24,800. All of her gross pay of 8,500 is going to be taxed at 20%. Even though Mary still has cut-off point there that she's not going to use, it's irrelevant. She cannot transfer any more of it over to Jack. They're restricted by the limit of €9,000. So let's recap on the allocation of tax credits in this example. Mary transferred her personal tax credit to Jack amounting to €1,650. And remember, the PAYE tax credit could not be transferred between partners. On the allocation of cut-off point, Mary was able to transfer the maximum amount of €9,000 off her cut-off point to Jack. And remember, this is the maximum that can be transferred regardless of how much excess cut-off point is available. We're now going to look at the calculation of Jack's PAYE based on the maximising of his tax credits and cut-off points as a result of his transfers from Mary. Jack's salary is 48,000. Because Mary transferred 9,000 of her cut-off to him, he now has a cut-off of 42,800, which means that's what he can earn at 20%. The remainder of his salary, 5,200, is going to be taxed at 40%. giving him a gross tax of €10,640. He then has an increased tax credit of 4,950 because Mary transferred her personal tax credit of €1,650 over to him, which results in an annual PAYE liability of €5,690. Mary has a salary of 8,500, which is taxed at 20% to give tax of €1,700. We take away her tax credit of 1,650, resulting in PAYE due to be paid by Mary of €50. We are now going to look at the other two methods of assessing married couples. The one we have just examined in the previous examples was the joint method of assessment. There are, however, two other options, one being the separate assessment and two being the separate treatment, where each party is assessed as a single individual. Under separate assessment, the tax affairs for each partner are independent of each other. Tax credits are divided equally between the two partners, and tax credits may not be adjusted until the end of the year. So, for example, if at the end of the year there are any unused tax credits or cut-off points, they can be reallocated at the end of the year, and both parties will have to apply for a balancing statement and get a refund if it's applicable. That is the main difference between the separate assessment and the joint assessment. In the joint assessment, the tax credits can be transferred in advance at the beginning of the year or up to the 31st of March. But under the separate assessment, both are assessed individually, and then their tax then is looked at the end of the year. Just remember too that tax payable under the separate assessment will be the same as tax payable under the joint assessment. The separate treatment is the third method of assessment for married couples and civil partners, where each individual is assessed as a single individual. Both spouses or civil partners are taxed on their own income. They receive tax credits and cut-off points due to a single person, and they pay their own tax. They have no right to transfer tax credits or cut-off points to each other. Please note that USC cut-off points cannot be transferred between partners for the purpose of USC calculations. For more information, log on to Moodle to access sample election forms. That's where the assessable spouse can elect to the tax office to become the assessable partner. A revenue leaflet IT2 for more information on the taxation of married couples and civil partners. Thank you.